First trade is a small win, and we're going to go in chronological order. So first trade is going to be from Tuesday. 1 second, just grabbing some water. First trade is going to be from Tuesday. It's going to be the small win on SPY, where 20, 30 minutes after we got out of it, 100% profit, right? So we're going to learn from that. And then Wednesday, from yesterday, we got the same type of setup on QQQ, and we actually applied what we learned from Tuesday, and we were able to actually stay in that trade for about 100% profit. So it's really nice to see us learn something and then being able to apply it the very next day and benefit from actually applying it. And then today, we're actually going to close it, do things a little bit different today. We're actually going to close up the workshop with going over the loss that I took on NVIDIA. And the most important part about that is how it was controlled, right? Just inevitable variance and a good strategy. It's going to happen. And the most important part about it is we got out quick, right? We got out when it got invalidated, when we lost our edge, when the markets were pulling down. And if we stayed in that trade for about another 30, 40 minutes, instead of a small loss, it would have been about an 80, 90% loss. And we could have given away all of the week's profits. And I know that's something that a lot of traders deal with. So being able to see that in real time, or more so review it together, you know what I mean, should be helpful. So let's do it. First trade, small win, right? And the goal here is identify the mistake. So this was on SPY, and what we were looking for, right, is downside. Now, we couldn't break out on the open. We failed to make support later in the morning, about an hour after. And about an hour after, we actually started to break down the next support. So market was pretty weak, right? We were in a downtrend on all these time frames. You could see the 1, the 5, the 15. So our micro, our macro, everything pointing to the downside. Now, what we really were looking for was support at the 5967. We could see Monday, right? We were watching 597, the pre-market low, the 5967. And if we rewind, we remember, right? We've been watching this level all week. Thursday, it was the high of day. Friday pre-market, it was the high before that breakout. So that 5967 was very important to us. And we knew that if we actually broke back below that, could lead to more weakness in the market. So let's see us get into this next trade. So we start to have that breakdown. Fast forward a little bit to it. And I want to zoom out right here so you can see everything on the 5-minute. I want to be able to see that next level to the downside. And same with the 15-minute. I want to zoom in a little bit here because we actually use all of the time frames quite a bit to get into this trade. So hopefully that's a good enough view for you guys. You can see that we're holding that downtrend, right? We start pushing into that 5967 right here. And we get that quick drop to the downside. Give me a second. I'm opening up the alerts on my left side just so I get everything timed up correctly. All right. So our first trade, right? We didn't jump the gun when that first move to the downside happened because we were trying to see if there was a reaction in there, right? Were we able to get back above? I didn't want to just chase that. The market's already pretty extended to the downside. So I was looking for a little bit more right here. Now, what we actually started to get was a retest in here. Let me turn on auto. What we started to get was a retest, right? So you had the failure of the support, and then you can see that price actually started to make resistance off of that support level. So you had your break of structure, you're seeing your change of structure, and that's a reason to get in, right? That's definitely a reason to get in. You've got the 1-minute confirming, you have a close on the 15-minute, you have a close below on the 5-minute. Now, the retest on the 5-minute didn't hold, and neither it didn't on the 15-minute, so very quickly this trade gave you a reason to get out. Right, you could see that right here. Kept making resistance. It gave you a little bit of profit. You probably were able to take a trim or whatnot, but you had that very quick break back above right here. And then I'm going to replay this candle right here at about 11:51 and watch how that candle initially was a retest. Right, I'm going to go back right to this candle. Watch how that candle jumps back above, retests in the same candle, and holds a bounce. It's going to happen quick. Ready? Retest, bang. So that was a clear break and hold above the level, a quick retest to see if there were buyers there, and there were, right? So you had a very quick test of that level. But it wasn't the usual break and retest that we look for, right, where we see red candles. Very different from in here, right? Because in here you see the break, retest of this level. There's very clear red candles coming off of it, right? That area is being made into a resistance. So now we see the pop back above. Now what I'm looking for is what I'm starting to think is, okay, that's a resistance, and the market's actually starting to turn to the upside. Well, I'm not just going to chase this, right? Because we haven't had a retest off of that key level. We haven't made support there just yet. We have invalidated the resistance, but this is one of my favorite trade strategies, one of my favorite trade opportunities, and it's called the fake out breakout or a breakout fake out, whichever one you want to use. And that is when you break back above a level and you go for the retest and it fails. Now, that is exactly what happened here. You could see the market get pretty extended from the 5967. You could see that we never pull back in to retest it, so that's what we're waiting for. And I'm not thinking that this is going to happen, right? I'm not thinking that, hey, we're just pulling up to go even deeper, because we are holding above the key level. So in my mind, objectively, I'm actually starting to flip bullish here, right? We're back above that resistance. What I should be expecting is a pull back into those moving averages, a pull into our key level, find some support here, and it's a bullish market, right? I'm looking to take this thing long. I'm much more comfortable doing that. But that's not certainty, because we got to take a look at the bigger picture. Look at the 5-minute, right? We're pushing on the downtrend, pushing on the moving averages. Look at the 15-minute. We're hitting the 9 EMA, right? And ever since that breakdown, we've been closing all the 15-minute candles below that 9 EMA. So this is really the highest that we should really extend before having a pullback. So that just really increases, right, the idea or really emphasizes the idea that I should wait for that pullback before taking any trades. If I see support, I can go long, but there also could be a breakout fake out. And when that happens, the best trade is in the opposite direction. So that's what got me into the trade. We see that we start to pull back. You see we go for the retest, and we go right through that level. So the retest didn't hold. Now, when that happens, you guys know that when I trade with levels, right? If there's a breakout of a level, I look for the break and retest. If there's a breakdown of a support level, right, I look for the break and retest to get in. But when there is a breakout fake out, I do not wait for the retest, right? Because this is not a support level. This was made into a resistance level. We broke above it, but we didn't make it into a support. So I just look for that price to flush. I see the 1-minute confirming that breakout fake out. I see the 5-minute, you can see down here getting a really big rejection. Zoom in a little bit more. And then take a look at that 15-minute candle. Right, we were looking at that. That was full body green, and look at where that's rejecting directly off the 9 EMA. So at this point, I'm getting in the moment we pull under, the moment we close under that candle. Right, stop loss is a little bit above that level. My target is that 595. I'm in the trade right here. All right, and I'm of course looking for the push into 595. Now, take a look at how this trade develops after we get into it. Push for a little bit of profit. Nice move to the downside. We actually break into a new low a day right here. All right, now we're retesting. Right, so we're actually getting that move back into the level, and that's okay, right? Because we're just getting the retest off of this level. We should be waiting to see what happens here. We should be patient. We're in the downtrend. We have a good risk to reward. We get a good strategy going. Let's see what happens. Start pushing into those new lows. And we've got some good profit, right? We keep pushing like 15, 20% profit, nothing too crazy. And at 1221, we actually push about 37, 40% profit, right? You can see right here, we actually start to hold that downtrend. And you can see how well the 1-minute moving averages are showing me the downtrend right now, right? Ever since we got back below this level, we had one retest off of the moving averages and, right, of course, the key level. And then we just started to get lower highs and lower lows. So what I'm doing right now, or what I was doing in real time, is I started to pay a little bit too much attention to the 1-minute. Initially, right, what was I just talking about? I was talking about the 5-minute, how the 15-minute helped us get into the trade. But then I started hyper-focusing on the 1-minute, and that is what really hurt me, because watch what happened. Right, we put our stop loss at entry. We start pulling up into the entry. And at this point, I'm seeing what's happening around my entry, and I get out. Right here, right? That is where I took my exit, 1227. That is the 1227 candle. Now, what's the problem with getting out here? If anyone can see it, that's my key level. That's exactly where my edge is. That's the most important part to my strategy. The reason I'm in the trade is because we're holding below the level. And we might have broken above the 1-minute downtrend, but that doesn't mean the trade's invalidated, right? There's many ways that this trade can reach profit before it's fully invalidated. And a break above the moving averages doesn't invalidate the trade. Now also take a look at where price is on the 5-minute. We're testing the 9 EMA. We've done nothing but reject off of that all day. And of course, the 15-minute, we haven't broken above that level. And what you'll start to realize is directly after we get out right here, what happens? We sell off a little bit more. You can see that 5-minute reject, the 15 pretty much undecided. And we even pull up into that level again. But what doesn't happen is the trade never gets invalidated. Not only do we not hit a stop loss, but we just don't even get above the key level. And 10 minutes passes, 15 minutes passes. Remember, we just exited for a small win. And then slowly but surely, I can speed it up right here, we have that drop below the target. And this trade actually went for, down here is at about 100%, but we dropped about 40 cents below the target. We did hit about 120, 130% on that trade. But what's the big problem here? Big problem is that we got out before it made the drop. We didn't give this trade enough time or enough room to develop, and we smothered it, right? It was giving us what we wanted. We wanted a break and hold below this key level, and we were able to stay in the trade as long as this acted as resistance. But what did I do that hurt myself, right? I've applied too rigid of a structure to the trade, right? Where I said, well, we're breaking above the 1 minute, so this thing is invalidated. But it truly wasn't. Right? Because what's the key to my strategy? The key to my strategy is the key level. So the reason I was in the trade never disappeared. My edge was present through this whole trade. And if I was patient and didn't get out and just let this trade develop under the level, as you see, we start to pull away from the level. And as you really zoom in here to the 1 minute, right? What happens in here? Let's just zoom in. You can see that when we start to pull away, we cross back bullish on the 1 minute. And look at every single candle. Get rid of that. Every single candle pushing and holding below the 9 EMA, which means even if we were in just one runner and said, hey, let's hold this runner until we see a breakout of the moving averages, or let's hold this runner until the target, we would have made it into the target, even if we sold right here. So, of course, reviewing this, I put a video out about it, and then I journal all my trades. I review all my trades. I mean, that was what I found, what I'm sharing with you guys right now. And I said, okay, well, that's a big issue, right? Because my stop loss was at entry, which is right here. But it's pretty much pointless to put your stop that close to where you are most advantageous. That's where all the sellers are. That's where I, if anything, could be even adding to the trade or taking shorts. So the fact that I'm getting out where I have the most advantage, that's completely, that just works against me. It's contradictory. So I learned from that. Right? I realized that a trade may pull back into the red after going to the green. And as long as I don't let it go too far away from me, as long as it isn't invalidated, it's justified to hold that trade. So we learned from that. The very next day, actually the next trade we took was on QQQ. Now this was 512. That's the level that we were looking for. And we had 510 below that. Now, I was keeping an eye on 510 because, of course, we have the low of pre-market. We have the low of day on Tuesday. And if we were able to hold 512, we could actually take a long to the top of this channel. Heading into the open, I start to see the 15-minute moving averages curve down, the 5-minute. I already see the 1 minute in a downtrend. So I'm not ready to do anything just yet, right? I know that we're mid-range. If we find support, we can go long. But if we start to break down, then I might actually want to take this thing short. So the market opens. See, we try to build up, but that build up fails. We push right down into the support and start to take a look at the 5-minute candle, right? That's a bearish engulfing. Take a look at the very clear rejection back below the moving averages on the 15. Now I'm going to slow this down, right? Because we get into the trade in about 10 minutes. You can see that we try to hold support here. And then we actually break below that level. So we did get the test of support. We tried to break out this morning, but it failed. We got the test of support. There was support there, but we just sold off from the high of day again. So no higher high on the day. So we actually had a high, a low, the same high, and then we sold off, right? So we're making a new low on the day. That's not an uptrend, and it's certainly not consolidation. You're getting a new low, you're potentially downtrending. Very strong 5-minute candle, those moving averages flipping bearish, the 1 minute bearish, the break below the key level, which is the most important part. So at this point, what I'm looking for is a retest of that 512. I hit play. I see that retest come in right here. We break back above the level. Now watch what happens, right? We start to reject it, right? So that rejection was the same exact trade that I took on SPY. It was just a smaller scale, right? Because we slipped below the level on SPY. We broke back above it, and it was a fake out breakout, and then we sold back, right? We weren't able to make support over that key level. The same exact thing happened here on the Qs, just to a smaller scale. We lost the level of support, we broke back above it, and then we failed it once again. So right after that trade, right, the fact that I analyzed this and rewinded it, that's the reason why I was actually able to catch this in real time the very next day. And I thought, holy cow, this is a breakout fake out to the upside. There's clearly weakness. We're having a downtrend. I'm going to take that shot. So at this point, right, I'm getting into the trade. I should rewind because it's off this candle close. Right, I'm getting into this trade, especially with that 5-minute candle closing below previously. All the moving averages to the downside. And my stop loss is above this recent high in here, right? Because I already know it's a warning sign if we break back above 512, but I can at least watch that recent high in there, right? That could keep me in the trade. Target to the downside is that 510, right? Give it a little bit of space to work out. All right. So now my focus is, what does price do after I enter? And I also don't want to smother it. Remember the lesson that we just learned from the previous trade we went over. The reason why I wasn't able to benefit from my analysis, I was completely correct. We had a trade set up that reached over 100% profit, but I wasn't able to benefit from the time I spent analyzing this because I choked it. I didn't let it develop. The very next day, can we actually apply what we learned? Hit play, into the green. We hit about 10-15% profit, and then bang, right above the level, right into the red. Now remember what happened yesterday, right? I shouldn't suffocate this, and we didn't, right? We let it develop further. All right, we're back in the red. We pull down again. All right, maybe we're going now. Nope, back in the red. And then we actually start to push off this level. So if we didn't learn from our mistakes back here, and if we just went, shit, that sucks, whatever, and then we went into the next trading day without understanding what actually went wrong and how we could fix it, maybe we wouldn't have stayed in this trade. Maybe we would have realized that it didn't work, I'm in the red, it didn't work, I'm in the red. We may have gotten out here, right? We may have jumped the gun. But learning from the past, giving it a little bit of time, never went above our stop loss, never made support off of our key level, in conclusion, never invalidated the trade setup. And from 9:59, about 10 o'clock, you could see that we use the moving averages as a downtrend. Price guides us lower, and bang, right? We get that push directly into 510. So just for us waiting a little bit through the trade, and then when we started to extend, 8 minutes passed, right? 8 minutes, and we hit about 90-95% profit right there. So very important, right? That we learn from the previous mistake, and we probably wouldn't have been able to do this if we didn't journal, review the trade, and then the next day that helped us catch it in real time. We got out of the trade right here, and then watch what happens the rest of the day off of our key level. That's it, ladies and gentlemen. Right? That was low of day. And then we had a beautiful trend day the rest of the day, pushed all the way to the upside, and reached our upper target. So very glad that we stuck to the strategy. We also didn't get greedy, right? We took out our last contract at that level. That's perfect entry, execution, patience, exit. And the day before, it was almost like a rookie trader, right? Our emotions made us act. So really learning from that mistake was huge. So at this point, right, it's the end of Wednesday. We're up big. Now today, Thursday. Right, so we're heading into Thursday. We're having a very good week. We're up big on the account. If you take a look at it right here, right from right here, the 11th, Monday, where we're up $69. Then on Tuesday, right, we had that winner on NVIDIA actually in the morning, but then we had the small win on SPY because we suffocated ourselves. And then on the Qs, look what we did by just holding the trade and letting it develop. Right? Look at the risk to reward there that we accomplished. $150 off of a $260 trade. For comparison, look at this. We used $400 on one position and made $90, and then $174 on the SPY trade, that first trade that we reviewed together, and we only made $22 off of it. So we need to make sure that the reward that we're getting from these trades is worth our risk. And part of that is actually letting the trade develop. The next trade that we took, it was literally half of the buying power that we used on the two trades. So one trade, and then we actually made more money than we did on both of the profitable trades combined. And that just had to do with waiting a little bit longer and letting our analysis that we spent time on, letting it actually pan out. Now today, right, we had a small win this morning on IWM, but the NVIDIA trade lost about $90 on, had a 3% account drawdown on. I want to focus on that. So what happened here on NVIDIA, what we were looking for was a breakout out of this channel, right? If we could catch it, we were looking for a long off of the bottom, the low of day yesterday, the low into close. If we could get back to the bottom at 146, we would have some interest in going long there, maybe catching the breakout early. But if that was a quick move, which sometimes NVIDIA does, right, have, then what we could look for is just the break and hold above this 147.8. We see the high of the pre-market. We see the lower high yesterday that held for hours. It's very clear that NVIDIA's in a little bit of a channel heading into the open. Now, I was also very open to going long NVIDIA because it was the strongest name in the Mag 7. I know that the strongest part of the tech sector is, of course, chips, and this is one of the best performing chip names, as we all should be aware of, right, in its industry. So looking for either of those opportunities. Let me zoom into the 5-minute, zoom into the 15-minute, the 1-minute. And you can see that very quickly, we start to pull to the upside. Now, we actually got into this trade at 1046, so I'm going to speed it up. Right off the bat, the high of the open was directly off of our level, and the low of the open was directly off of our level. So when I see that, right, when I see my levels have big, significant moves off of them, it increases my confidence to take a trade off of those levels if we reach them again. So if I come back into this level where buyers were that I already had marked, I'm even more interested in taking a trade off of that. And if we come back up to this resistance and are able to break and hold above it, I'm even more interested trading there. So let's see what happens. This is when the market started to sink. We ended up actually regaining this level. So you did have an opportunity down here. You could see the break and the retest off of 146. But at this time, we were actually trading IWM, right? So we were focused on that. But we started to break out at about 1040. We got out of IWM. Now at this point, I do think that the entry into NVIDIA was arguably a little bit late. But we didn't have a skewed risk to reward, and that is one of the most important things of a trade. So at about 1046, we took that trade. You can see that we tried to make support at the top of this range, did a pretty good job, but we filled back below. Then we got back above the range. You could see we started to make support there again. So at this point, I started to grow interested in the trade, right? I realized that we were breaking out of the range. That's very clear. And even though we failed, we did it again. So buyers were putting up a good fight. And I started to zoom out to the macro, not get too lost in the 1 minute, right? I know it's later in the day. And I started to really focus on these 15-minute candles. The sell-off that ate up the whole range, it got completely bought up. And then after that, we didn't sell off again. We actually broke out and held. And then the next 15-minute candle that tried to sell off, what did it do? It got bought up, right? Look at the wick on that. Mostly all of the progress that the sellers made was deleted by the buyers. And then again on this 15-minute candle, right, I was starting to see a little bit of a bounce. Now, I also recognized that we were having this high of day in here at about 148.50, right? We hit it once, twice, 3 times, again in here, right? We were just continuing to squeeze up into that. So I was looking for a little bit of a push off of it, right? Although I could have taken this break and retest, it would have been a pretty good entry. I was okay with waiting a little bit and making sure that I could get a good risk to reward. So hit play. Let me actually slow this down because we get in a few minutes. We have this little retest in here at 10:45, and then I'm waiting for that pop into a high of day to take the continuation trade, and that's what we get. And I like what the volume's doing too, right? I like that on the up candles, the volume is high. On the candles that are pulling back, they're low. Right here on the breakout candle again, another high volume candle. So I like what I'm seeing. I've got an uptrend on the 1 minute, the 5 minute, the 15 minute. It's outperforming the Mag 7. It's outperforming SPY, QQQ, IWM. As you guys can tell, I'm really trying to build up the idea of this trade, right? But I'm doing that for a good reason, because no matter how sexy a trade setup is, no matter how perfect it is, no matter how more bullish it is than everything else in the market, it's not certainty. And if you get too in love, if you fall in love with a trade, it's going to be much more difficult to get out of that trade when you have to. Whereas this QQQ trade, it was pretty good looking, right? But after we got into it, it got kind of ugly. But it ended up being one of the best winners this week, right? This NVIDIA trade was the highest quality opportunity we probably took this week, but it just ended up being a loser, right? And that's the inevitable variance that you have to be okay with. And the quicker that you're okay with this turning into anything, the easier it is going to be to get out. So we're in the trade at this point. I take my entry, right? My stop loss, I actually don't put at the key level. I put a little above that point off of a recent low at about 148. And then my target is 150, but I know that that's the all-time high. I know, of course, we could go beyond that point. But still, almost a 3-to-1 risk to reward. Even if we pulled underneath the all-time high, this trade setup is still worth it for me, and I'm even more interested in it, not just because the risk to reward, but like I said, it's a high-quality opportunity. So we get into the trade. We're in 3 contracts. It starts to push a little bit, but wait, we're having a little bit of a pullback. Now, I see that the 1 minute starts to bend, right? I see that we start to pull back, but I'm focusing on the bigger time frames, right? Because what I've learned before is just because the 1 minute breaks down, it may be losing momentum, but that doesn't mean that, okay, the 1 minute has broke, it's going to go through the 5, it's going to go through the 15, it's going to go through the level. That's not certainty, right? And we need to be able to watch that bleed through the levels or go green through all the levels, right? That's why we're watching the different time frames for different perspectives. We don't want to get tunnel vision in here. So I understand that that uptrend is curling. I can see very clearly that we're closing candles below it. So I'm seeing as we pull back, right? Maybe I have an opportunity to load in a little bit more, buy another contract, if it permits it. And I had a question the other day, right? If a trade is losing, it's cheaper. Should I just add more? No. I think there's a right way of averaging down. I think there's a wrong way of averaging down. It's a whole other thing to get into. I will post about that tomorrow. I have something written up for you guys. The wrong way of averaging down is, well, I'm losing, and if I buy more, I could make money quicker. Right? I'm so guilty of that. I know you guys are maybe guilty of that too. That's the wrong way to do it. Why? Because when you're buying into a trade, you got to make sure you still have an edge, right? Why do you put money into a position? Because you have an edge. You have a reason to be doing so. So if you put more money into the trade, well, you either better still have that reason or have a new reason to get into it. So when I average down, I make sure that it's not just because it's cheap. It's not just because I need to get back into profit. I make sure that there's justification in it, right? So we start to pull down here towards where the buyer should be, towards the key level. We're also pushing into the 5-minute 9 EMA. We're getting close to the 15-minute 9 EMA. So I know that bigger moves could happen off these bigger moving averages. So if we start to see some buying pressure down here, I'm not going to double my position. All I did was add in 1 contract at 11:01. So you could see we start to pull in and we start to turn around. Now we get the jump right off the 9 EMA. We get a bullish engulfing on the 15. We have a nice candle to the upside, right back above the moving averages. I add in a contract right here, right? I'm increasing my position size not because it's cheap. I'm increasing my position size because I'm growing confidently in it. I hit play. And you can see that we continue to reject that high again, right? We get near this high of day. We start to really focus on that. Now, what I start to look at the most is, remember that area I talked about right here at about 148.5? That high, the high. And you can see, what are we trying to do, right? We're actually trying to make support over it. So that's not a key level, right? It's not something I'm trusting with my life. It's not something where I'm not going to add any more at that position or take a trade off of it, but it can help me actually manage the position. So I start to watch that 148.5. I start to keep an eye on that and just consider, right? We had resistance there for most of the morning. The uptrend broke through it. I see the 5-minute 9 EMA getting above it. I see both of these moving averages above it. So I can actually start to recognize if we're making a higher low. And that's very important for me to hold in my trade. If we start to fail that higher low, right, then we may be having a downtrend. And do I really want to hold this trade anymore if we're having a downtrend? Now, another thing that helped influence an exit is the markets were selling off, right? It's actually outstanding how strong NVIDIA was, but it wasn't strong enough, right? It couldn't hold up the markets. SPY was selling off, QQQ was selling off, but NVIDIA kept pushing. Now, that is actually what, during the trade, changed the grade of this trade. You could get into an A grade setup, which this arguably was. I think if it had a little bit better of a risk to reward, it's an A grade. But this turned into a B, a C grade setup because the markets did not agree with it. Although this was breaking out, the S&P started to sell off, the NASDAQ started to sell off, and the NASDAQ's very important, right? That is the tech index. So if the entirety of the tech index is selling off, NVIDIA is, it's essentially the core of the tech index right now. I think it's either that or Microsoft, right? That, Microsoft, or Apple, they're the top three pieces in the NASDAQ. So I'm seeing the whole NASDAQ sell off. I'm seeing the broader market, and that means a lot, right? That is starting to pull away the quality of this trade because the market's dragging everything down. So I'm giving it a chance, right? Just because the markets are falling below their supports doesn't mean I'm going to jump the gun because I'm trading NVIDIA, right? I'm not trading QQQ. And there are some instances where the Qs will sell off, but NVIDIA is just so strong that it will go to the target. And I don't want to jump that decision, right? I don't want to jump the gun. I want to give it a chance to develop, just like we saw in the previous two trades. So with NVIDIA, right in here, right, we start to see a push again, right? We start to see some buying pressure off of this area, and that's exactly what we want to see. We're continuing to wait for a trim, and you start to see that weakness back into the area, and then buying off of it, and then weakness back into it, and you can see, right, it starts to get messy, and this is when the market started to pull down. We actually pulled into about 10-15% profit right there, but not enough to take a trim. We weren't even, a third of the way into the target. And at this point, I was starting to get pretty confident. We were very clearly making support where we previously had that triple top. We were actually starting to extend. It looks like we were starting to hold a higher low. But one thing that really gave me a warning sign was the volume in here. Watch what happens when we pull into 149 and keep a close eye on the volume. Give it a second. It'll get up there again. There's 149. You saw that volume come in. That is the volume we've been waiting for all day. And that volume was actually the largest volume candle since open. On open, the 1 minute candle was about 290K. That was 400K. Big punch in volume. And when we see that much volume come into the market, the close of the candle can tell us a lot about how that volume sided. If I see a big volume candle and it's a strong green candle, well, there was that much trading and the buyers won that time frame. That's good for us. But I see that get punched into 149 for the first time, right? Because we had, right, what did we have? We had 149, we had 148.99, we had 148.98. Right here, we had 149.00, ton of volume. And to me, that looked like profit taking. It looked like selling pressure. And it was a warning sign. But we were still holding the trend, right? We're not going to make that jump decision just yet. And we really start to see us sell out of there. Now, again, right, we push in. And you can see that. Where did we bounce right here after that high volume sell-off? You know it, right off of our entry, right off of that area. Now, throughout this process, what we're doing is we're talking ourselves through it, right? We're realizing that, all right, this isn't the beauty that we thought it was. It was a sexy trade up. Keyword was, but the markets are selling off. The 1 minute uptrend is getting very noisy, right? It's very clearly not holding trend anymore. The 5 minute, what's happening in here? There are candles closing below it. You can see how well it held the uptrend earlier, but we've been at the same high for what? Over an hour now. On the 15 minute, we're even getting kind of weak there. Those moving averages are starting to flatten out. So being aware of those warning signs, that brings you into the reality that this may be a loser before that reality even happens. And what does that make it easier to do, right? That makes it way easier to actually get up to speed with reality when it does lose and act on it, right? Being ready to act is a superpower because people who just think it doesn't matter, we're holding, it doesn't matter, nothing's wrong with this trade, no warning signs whatsoever, and then you have that drop below, that's when they start thinking about exiting. And when you're thinking, you're not ready to act. And when it drops further, you're deeper in the red. And then what do? Then your emotions start hijacking you. And you go, well, shit, I'm down 30%. All right, it's past my stop loss. I'll see if it can hit the key level. And it doesn't hit the key level. And then you go, oh, okay, well, we have this low down here in the 15-minute. I'll wait for that. And then you're down negative 50%. And you guys all know what happens then, right? Then it's like, oh, well, whatever. I'm down this much. I might as well just see what happens. You make a habit out of that. I don't even have to tell you what happens to the account, right? So that continues to break down. And we actually start to see us retest this area for the first time as a resistance. And we do actually start to reject off of it. Now I see, of course, the 5-minute gave us a warning sign. And you can start to see in here, right, specifically on the 5-minute, that after we broke down, we even tried to bounce. And we retested the 9 EMA as a resistance and sold off from it. When that happened, that is when I got out of the trade. The 1-minute broke down far earlier. We weren't able to hold higher lows and higher highs. The markets were selling off. The 5-minute was giving us that breakdown. We even saw a 15-minute close below the 9 EMA. We had nothing left. All we had was this key level. So, if it bounced from here and it gave us an opportunity, we could get back in. But essentially everything that I was looking for in this trade disappeared. So we exited. We exited right here. Now, after that exit, it sucks a little bit, right? It does suck a little bit because you had a small win in the morning and you were looking, to make the day worth your time. And then you take this loss. But what really makes you okay, at least, if not good, is when this happens. You get out of the trade, and then, right? It goes much, 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 much lower. And it went all the way down into that 146, if I'm not mistaken. Speed it up even more. Right? So a little bit after we got out of that trade, it ended up going for about negative 80, negative 90%. So look what happened here, right? This whole week from the 11th into today, do the sum of that, right? $362 profit. So losing that 90 was absolutely nothing, right? Losing that 90 was perfectly okay with that trade. Now, those contracts came into about $20. What happens if we made one mistake today? After a great week, what would happen? Let's just take a look. $230. Then that 360, that's a little bit different, right? That's removing more than half of our profit. And look at the amount we started with this week. We started this week actually with about $24.80. So we would have given up essentially all of our profit this week. The fact that we took the quick exit, $27.50. Huge difference, right? Huge difference in how we started the week. That's the reason why we're up over $200, almost $300 this week on the challenge, because we remembered the number one rule of trading, which is survive. We took that loss, and then what can we do in the next opportunity? We can have this again, right? Because these are going to happen, right? Look it, ready? 5 wins, a loss. 5 wins, a loss. 5 wins, a loss. So if I take another few wins in a row and my trade ends up being shitty and it goes in the red, I can't get into that emotional hijacking. I can't get brainwashed. I got to realize that I'm due, right? So get out of the trade, survive, which is the number one rule of trading, and be ready for that next opportunity. So we've had a great week. I'm super happy with how the 1K is doing. And I think the reason that we're doing so well is because we're being great losers, which sounds crazy, right? It's like, you're a good loser. It's like, yeah, I am a good loser, right? We are good losers. When we're proven wrong, we get out, we keep our losers small. We're doing a good job of keeping our winners big. And that's why since October 1st, we're up 175% on the account. And I don't think there's anything wrong with that. We're not making $1 million, but I don't know. I think we're doing pretty good. So hopefully you guys learned something. SPY with the trade, that was a small win, a premature exit. We learned from this mistake, and the very next day, the same exact trading opportunity presented itself, and we were actually able to take what we learned on Tuesday, apply it Wednesday, and hit 100% trade. And then today, we had a sexy setup. But inevitably, the variance, we lost. We handled it correctly, and we live to fight another day, and we keep ourselves green on the week. And that's what's important, right, is hanging on to what you worked for.